Okay, so two of you got on to me just to go through this mercantile solution in regards to your tabular statements. Relatively easy question. The only thing that may have given somebody a bit of difficulty was the May entry. I'll work down through this, lads, and what I'll do then is on a separate little video that I put straight onto Edmodo is I will do out the May working for you in regards to your insurance prepaid. The rest of the question, lads, should be relatively easy. Again, any questions, just drop me a message or an email. Okay, so the first thing you do, obviously, lads, okay. Yeah, that's right there. Okay, so the first thing you do is obviously this section here. Okay, so you set up your tab statement, all right, and you just rob all these figures from the actual question itself. Okay, so just notice here that the first or the top section is all your assets, and the bottom section then is your liabilities. So obviously then in your fixed assets you've land and buildings. With it, don't forget your depreciation, which is a negative figure because it's decreasing your fixed asset. Vehicles 70,000 with a depreciation of 28,000, negative figure. Then you have your stock. Okay, you have your debtors. Now they have shoved in goodwill there. Okay, but you wouldn't be aware of goodwill until later on the question when it was required to do it in February. So next thing I would have there would be insurance prepaid, and then I'd leave, as I said to you many times before, leave 2 spaces before you have then your total line. Likewise, then you come down to liabilities. Okay, and they start with the long-term liabilities, which is a good idea. So ordinary shares, share premium, and your P&L balance taken straight from your balance sheet and financed by. Then you have your creditors, expenses due. Again, you're not to know until you do January about revaluation reserve. So the next one you'd have there was bank, and then you'd leave 2 spaces again for any new items that you may have in either your liabilities. So let's move on to the actual workings then. So January. So it says Mercantile PLC decided to revalue land and buildings at 380,000. Now this includes land valued at 100,000. So you only need that obviously for your depreciation for the end of the year, because it says in that the buildings are depreciated for the years to be 2%. So clearly what you do here first of all is that you're going to revalue from 252,000 up to 380,000. Taking those two figures away from each other, you get the figure here of 128,000. Okay, when you revalue, remember from your question 1, you say goodbye to your depreciation. So in order to get rid of that negative 15,000, you're going to have to add 15,000 to bring that depreciation balance to a 0. So that's that 15,000 there, which gives you 143,000, which makes it very easy for you now. Okay, the next thing you'd have to put in here is this revaluation reserve. Okay, so you put in revaluation reserve 143,000 and 143,000, and make sure that these equal each other. That's January finished. In February then, Mercantile bought an adjoining business which included, here we go, you got buildings for 90,000. Okay, you got delivery vans or vehicles for 45,000. And then it says creditors, bring down here to creditors, 15,000 is the next thing you would do. The purchase price was discharged by granting seller 100,000 euro worth in shares. So there's your 100,000 euro worth in shares at a premium of 25 cents per share. So 25% of 100,000 is obviously 25,000. Okay, now you add up 100,000, 25,000 and 15,000 and you obviously get 140,000. Up above here, 90,000 and 45,000, it gives you 135,000. Therefore, what else did you purchase? Well, you purchased goodwill. Okay, which obviously you take the 135 from the 140, will leave you a balance of 5,000. So therefore you come over here and you would put in your goodwill at the bottom where you left your 2 spaces, and there's your goodwill. Now the 140 and the 140,000 equal. In March, okay, goods previously sold, goods previously purchased for 2,000 were returned. Well, you're returning 2,000 euro worth of stock, so you take 2,000 from your stock. Okay. A credit note was issued showing a deduction of 8% of the invoice price as a restocking charge. Okay, well if you come down here and you will see in your liability section, if you go to your calculators, you type in 2,000, okay, and you multiply that by 8%, you're going to get 160 euro. That 160 euro is an expense, okay, therefore it's a negative figure in your P&L balance, and you will also take away 1840 from your creditors. Okay, if there was no restocking charge, you would have taken 2,000 away from your creditors, but because they're charging you, okay, you still owe them 160 quid, hence why you only take away the 1840. And again, these two now balance. They must always balance. All right. Sorry about that. Now, May, as I said, I'll put up a separate little video on May in regard to the little bit of work in here, because some people might get a little bit confused, but I'll talk you through it here anyhow. If you look at May here, it says received a bank statement on the 31st of May showing a direct debit of 1680 to cover fire insurance for the year. Now, if you notice over here, you already had insurance prepaid. Just looking at this here, you had insurance prepaid of 600. Okay. Now, you've paid 1680, so you put in insurance prepaid 1680 here. So you paid 1,680 euro for insurance. All right. How did you pay it? You paid it by a check coming out of your bank account. So there is the 1680. Now, if we come over here, we want to look at this figure and how they got this figure. Okay. Now, what I'll do is actually, you know what, I can do it down here, lads, so I don't need to put up a separate video. You paid 1,680 euro for a full year of insurance, which breaks it down to 140 euro per month. Okay? I'll try and get this out of the way. Now, it says here on the 31st of May, okay, year ending 31st to 5th, excuse me, sorry, the cover in fire insurance for the year ending 31st to 5th, 2013. We're talking about 2012. That means you have 5 months for next year paid, which means the expense this year is 7 months of that 1680 plus the 600 at the start of the year, which was prepaid, obviously, for the first 5 months. So if we go 7 by 140, okay, we will get 980. Okay, so that is for this year. All right. And we're also going to add in that 600, okay, which was from the start of the year here, that 600 here. Adding those two figures together, you get this figure of 1580. So that is your expense for this year. Okay, it was what you had prepaid at the start of the year, and what is your add or your expense for this year. So those two figures gives you this figure here of 1580. All right, and it's negative because you're taking away, okay, what your expense was from the year from your insurance prepaid, and what's left over, okay, is that 700 quid. Now you could get that by just simply going, well, you have 5 months prepaid, so 5 months by 140, okay, will give you the 700 quid. Okay, just double check that figure. Yep. Okay, so that there is what's prepaid at the end of the year. So that 700 goes in there. All right, and that's all that's to that working. So you can go on to June then. June is straightforward. Interim dividend of 5% per share. You get 5% of 350,000. Okay, you get 17,500. Okay, that's that. Two figures there. You take the 17,500 from your P&L balance. Why? Because it's an expense. Okay, and how do you pay? You pay them by checks. You issue checks to your shareholders of 17,500. Obviously, zero balance. Okay. July, a payment of 600 was received. Okay, you've done this question or this working many times with your long questions, question 1. So a payment of 600 was received from a debtor whose debt was previously written off and who now wishes to trade with Mercantile PLC again. This represents 60% of original debt, and the debtor is undertaken to pay the remainder. Okay, well, this is relatively easy, gents. Okay, well, 600 divided by 60 multiplied by 100 gives you €1,000. That's where you get this P&L balance from. This is a gain. This €1,000 is a gain. You had previously written it off as bad. They've come back and told you, we're going to pay you now, so therefore it's a gain. The 600, okay, is a check that you would receive from this debtor. Why is it in negative figures? Because remember, your bank is in the liability section, meaning it's an overdraft. So you're making your overdraft smaller. So the balance there is a negative 400. Sorry, that's a misprint. That should be a positive 400. Obviously, a positive 1,000 minus 600 would give you a positive 400. So that's a misprint in solutions. All right. Now, if you come up here then, the debtors, okay, the balance, they've paid you 600 of a debt of 1,000. So they owe you 400. So there's your balance for your debtors. Okay. Now, December, a delivery van which cost 12 grand and was traded against a new van costing 20,000. Okay, an allowance of 5,500 was made for the old van. And then it says depreciation to date on the old van was 7,200 and the depreciation charged for the year was 17,000. The first thing I would do there, gents, is quite obvious. Okay, if you had a delivery van that cost 12, you got rid of it, and then got a new van costing 20, well then your delivery vans have increased by 8,000. Okay, remember, when you're trading in a new van, what goes with it? Your depreciation. Okay, why is it a minus? Sorry, why is it a positive? Because you want to decrease your depreciation. Because your depreciation over here, if you look at it, is a negative figure. That gives you 15,200. Now, don't worry about the 700 just yet. What we look at here is, well, how much did you pay for the van? Well, if the van cost 20,000 and they gave you an allowance of 5,500, okay, well then you paid 14,500. And the easiest way to know if you made a profit or a loss is compare the both. So you compare 15,200 with this 14,500. What do you need to make them balance? You need an extra 700. Therefore, that was a gain. Okay? If it was the other way around, of course, it would be a loss. Now, we can finally move on to our next part of December here, which you leave for all your depreciation and your prepaid or due. Okay, we have the 158 there for insurance prepaid already taken care of. If we look at here, the 7250, where am I getting that? Well, the depreciation for buildings is like so. Just do it up here for you, depreciation on buildings. Your depreciation on buildings, if you look at it there, you have your 380,000, but you must minus the 100,000 of land. So it's actually 280,000 multiplied by your 2%. Plus, don't forget you bought an adjoining business in February, which included 90,000 of premises, multiplied by 0.02, multiplied by 11 over 12. Okay? So that 208,000 by 0.02 will give you 5,600, and this 90,000 by 0.02 by 11 over 12, okay, will give you 1650. Adding those two figures together, you get to 7250, and that's that figure there. And obviously it's depreciation, so it's a negative. Depreciation means to diminish the worth of your fixed asset. The 17,000 is given to you. It just says there, depreciation charge for the year in December for the vehicles was 17,000. We can add 1, 2, 3 of those together. You get a negative 25830. All of those, lads, are of course expenses. Depreciation expense, insurance is an expense. Therefore, all of it will be an expense in your P&L, which gives you the 25830. You simply add across, lads, and you get your 470, your 7250, and so on and so forth. Add them, same down here, add them, and when they balance, even though you've done your tabular correct. Alright, there you go, boys.